Plenary session number 3, Macroeconomics and Finance in the Digital Age. That is part of the ERF 28th Annual Conference. I'm very happy to say that we have a very desired kind of panel today. We are honored by having the keynote speaker, Professor Franklin Allen. And let me just introduce Professor Allen, and when we get to the discussant, we will also introduce our discussant. Professor Allen is Professor of Finance and Economics and the Executive Director of the Breven Howard Center at Imperial College London. And Professor Allen held position there since 2014, and before that he was at the Wharton School, University of Pennsylvania, from 1980 to 2016, and he is currently emeritus like myself, so we are not going to tell our age, I think, in this case. He is the he was the Vice Dean and the Director of the doctoral program at Wharton, co-director of the Wharton Financial Institution Center. He is the executive director of the Review of Financial Studies and managing director of the Review of Finance. So as you can see, he has been also the president of the American Finance Association, Western Finance Association, the Society for Financial Studies, Financial Intermediation Research Society, and the Financial Management Association. Professor Allen is a fellow of the Econometric Society. This is an honor for very few people. And he received his doctorate from Oxford. And his main area of interest is corporate finance, asset pricing, financial innovation, comparative financial system, and he has a lot of gems on his crown, but his publication, the widely known, is the textbook on principle of corporate finance with Richard Braley and Stuart Myers. I think it's in probably the 12th edition right now. We are very honored to have Professor Allen as a keynote speaker. And we will give Professor Allen around 20 minutes to do the presentation, and then we will introduce the discussant for their comment. And in the end, we will have definitely time for our audience and the floor to ask the question. Professor Allen, the floor is yours.
Thank you, Hassan, for that very nice introduction. Let me start by sharing the screen. Hopefully everybody can see that. Okay. So I'd like to start by thanking the organizers of the conference for inviting me to give this talk. What I'm going to talk about is globalization of finance and fintech in the MENA region. And I think this is particularly relevant to the subject of the session and much of the conference on macroeconomics and finance in the digital age. I think fintech is by its nature very global, and it is revolutionizing the financial services industry. So in terms of its macroeconomic effects, we know that finance plays a very important role in economic growth and employment, and in correcting inequality and reducing it. The countries that I'm going to focus on are not all of the MENA countries. I'm going to exclude Syria, Libya, Palestine, and Yemen because of the conflicts there. And I'm also not going to talk about Mauritania, Somalia, Sudan, or Eritrea because of a lack of information that we have. But I'm going to divide the remaining MENA countries into two groups. And what you can see is that these are based on their GDP per capita. So in group one, we have some of the wealthiest countries in the world in terms of GDP per capita in real terms. So Qatar is often given as the richest place in the world, and there are many other in this group which are very high in terms of GDP per capita. At the other end of the spectrum, we've got group two, and some of these countries are very poor. And so there's a big difference between them and how fintech will affect them. I think it's important for both of them in ways that I will outline, but the ways, some are similar, but others are rather different. Now, if we look at MENA financial systems, first of all, what we know is that they're overwhelmingly bank-based. So most of the finance is done through banks, very little is done through stock markets, and there are limited other kinds of markets like derivatives and so on. Now, the nature of the economies in these countries is that the firms are either large and state-owned or politically connected. So there's a group of big firms. But then there's another group of small and medium-sized enterprises, which are quite different. And by and large, the big firms have access to banks, while the SMEs do not. Now, one of the issues is, as we go through the climate change prevention process, hopefully, so as we reduce the reliance on fossil fuels, what may happen in some of the group one countries, which are wealthy because of large oil and gas reserves, and some in group two, is that what's known as stranded assets may develop. So if we look at coal, except for the last few weeks, obviously, with the problems in Ukraine and Russia, then what we see is that coal was, I think, generally regarded as one where we won't dig up all the coal supplies in the world. There are huge coal supplies around the globe. We probably won't use all of them, so there'll be stranded assets. Oil and gas, I think many people think a similar kind of things will occur. And one of the implications of that is that in the MENA countries, which rely heavily on sale of fossil fuels to finance governments and provide employment and so on, there's going to need to be a transition from the current kind of economy to one where there are new industries that are developed. Now, the problem is that the usual way of building up new industries, if we look at the US or China and parts of Europe, is that we usually have venture capital and then IPOs into stock markets. But if you don't have stock markets, that process becomes much more problematic. And we'll talk more of that as we go through. Now, what about infrastructure for accessing the internet, and therefore the internet and the use of fintech? Well, in most MENA countries, even those which are quite poor, there are high rates of mobile phone penetration. So many people have access to the internet. So the potential for fintech to affect the financial system is high. Now, if we look at the group one countries, the wealthy ones, e-banking is doing well. So it's much like Europe or the US or Japan and China. But in group two, there's more of a problem. There's less affordability for the internet. And so those kinds of e-banking services that have developed in other parts of the world are not used so much. Now, nevertheless, I think fintech has huge potential to improve financial inclusion. So that's in financial inclusion in terms of individuals and households having access to the internet and banks and other financial services directly. But I think in particular, what we can see is that in group 2 countries, so the poorer ones, financial inclusion is a problem. Many people don't have access to bank accounts and the financial system. And in particular, another big issue is that many SMEs don't have access to loans and banks and other kinds of financial services. So I think financial inclusion for both those reasons is very important for economic growth. Now, the usual example of a country that has increased its financial inclusion dramatically is Kenya. And Kenya is a very interesting example because the regulators took a very different view than most countries in terms of how to improve financial inclusion. Now, perhaps the one that is best well known is M-Pesa. And M-Pesa was started by Safari.com, which was originally state-owned, but then became part of Vodafone when it was sold into the private sector. And in most countries, when telephone companies went to the regulators to see if they could provide services, financial services to people, the regulator's response was usually, well, you're not a bank, so you can't do it. But in Kenya, what they did instead was to say, well, as long as you satisfy certain safeguards so that we won't have problems of fraud and so on, and we have safe bank accounts, essentially you have to deposit money in banks to back any money that you, or money equivalents that you use in your telephone M-Pesa network, everything will be okay. That's what they did. M-Pesa was incredibly successful in the sense that within a few years, a large proportion of the population had M-Pesa accounts. And what these allowed people to do was move money around the country, improved efficiency and so forth greatly. Another great innovative institution in Kenya is Equity Bank, which developed very low cost bank accounts by using computers at a time when banks like Barclays and Standard Chartered and so on were withdrawing from the countryside. Equity Bank was able to vastly increase the number of people that had accounts. So roughly 30 to 40% of the population over a few years. Another example of financial inclusion through fintech is China. Alibaba and Tencent and so on have been very successful. They've also done a very good job in China of including SMEs and providing access to finance for them. Now, some of the services that are allowed over the internet in various places are credit scoring. So traditionally, credit scoring has been based on very simple kinds of algorithms using income and so on. What fintech has allowed is a lot more sophisticated kinds of credit scores, which do much better at predicting default. And that's allowed lenders to lend to a large proportion compared to traditional credit scoring methods. And the Chinese, in particular, Alibaba and Tencent, have been very good at that. So if we go to group 1 countries, then digital banking is more interest to them. And what happens there is that the large banks are able to provide many of these services directly. So financial inclusion is much less of a problem there. Some disintermediation has occurred in some of these wealthier countries. which is P2P lending. So you have, instead of going through a financial intermediary like a bank, you go through platforms. And again, the use of credit scoring or sophisticated credit screening techniques has allowed improved access to many people for loans. Now, some of the other revolutions that are taking place are effectively cryptocurrencies, which rely on distributed ledger technology and blockchains. And there are lots of different types of cryptocurrencies. The one that's probably most famous is Bitcoin. Originally, these were designed for transactions purposes, but they became essentially speculation vehicles. And so one of the problems is that the prices of many of these digital or cryptocurrencies is very volatile. So Bitcoin varies tremendously within the day, across weeks, across months, and so forth. So it's gone up incredibly much over the time that it's been in existence. Started out at a few cents per Bitcoin. A few months ago, it peaked out just below $70,000 a coin. It's now down to around 40,000 in a few months, and it may well go down more or could go back up again. Now, that's one kind of cryptocurrency, but I think, as I say, it's mainly for many people a speculative instrument. So many people have seen the huge rise in prices and think of it as an investment, a very speculative one, albeit. But I think that the technology is very important. It's used for transactions. The Bitcoin transactions are used for things like drug dealing and arms and so on. But most of it is for speculation. But this technology is very useful in other areas, in particular ICOs, or initial coin offerings. And as we'll see in a minute, they are an alternative to the conventional way of venture capital and IPOs for small firms to grow and finance themselves. And then the other area which these cryptocurrencies seem likely to have a very important role to play is in terms of central bank digital currency. So these are alternatives to cash, which are used electronically and use blockchain technology like Bitcoin, but they have a very different verification system. So we'll talk about both of those in turn. Now, how do initial coin offerings work? Well, they're quite different in many ways than venture capital and subsequent IPOs. With venture capital, you have a few wealthy or institutional investors. They put in money into funds, which are then illiquid typically for 2 to 3 years before the IPO or the sale of the company, and then you can cash out. But it's really not very suitable for small investors at all. Now, ICOs work differently. They are done over the internet. Typically, many have been unregulated, but what they do is provide access to firms to finance themselves. Now, the way it usually works is there's a white paper which describes the nature of the project, and then investors can ask questions and get answers, hopefully, from the promoters. And then the firms make a sale of coins to raise funds to allow them to complete the project. And many of these projects are computer-based. And the idea is that the people who are promoting the firm keep enough coins to incentivize them to actually finish the project and allow it to work and so on. And then you use the coins to buy the product that's being provided by the platform. And all the transactions are recorded on a blockchain. Now, the thing that makes ICOs very different, than IPOs is that you can use the coins to buy the products, but you can also buy and sell them on cryptocurrency exchanges. And these operate typically 24/7 throughout the year. And so these are very liquid. So even after you've just purchased the coins and made the initial investments, you can sell them typically fairly easily and get out. And they're not illiquid in the same way that venture capital is. So what are the advantages and disadvantages? Well, the advantages are that it's borderless, because typically this is done over the internet. It allows them to, in many cases, avoid legal hurdles from regulators. But it's a much bigger potential group of investors. As I just mentioned, liquidity is high because you can buy and sell the tokens on the cryptocurrency exchanges. So those are the big advantages. The disadvantage is that there's a lack of regulatory oversight. So this is very much an unregulated market, and that potentially exposes investors to problems of fraud. Central bank digital currencies are like Bitcoin in the sense that they're recorded on a blockchain and so on. But the key thing about them is that they are issued by central banks. Now, the country that's farthest ahead in this is China. They've had city-level trials, and they actually introduced the e-yuan during the Beijing Winter Olympic Games. It wasn't quite what they'd hoped because, of course, of COVID, so that only people who got to try it out in terms of the Olympic Games were the attendees and so on. It wasn't there weren't any people from overseas who were visitors and so on. So it wasn't quite what they'd originally hoped, but nevertheless, it worked pretty well. The way the e-yuan work is you go to a state bank ATM machine, and you can use those ATMs. Instead of withdrawing cash, you can get them to transfer money to your e-wallet. And then when you pay, you hold the phone close to a point of sale device that if all the vendors have. And so it works. It seems to be working okay. They've got an up and running system. And I think one of the things that this will allow them to do, and which they hope will happen, is that this fact that they've got a system up and running long before any other country is that it'll help them internationalize the RMB and make it used across borders very easily and so on. And I think these developments, particularly the Chinese one, is very important for the MENA countries because many of them have large sales of oil and gas to China. It's one of the main customers for importing energy, obviously. And so I think there is a synergy there, which is important and will be important for MENA as well as for China. Cybersecurity, obviously, very important aspect of fintech. We hear about scandals of many different kinds. These are an important problem for Group 1 and Group 2 countries. So just to give you a couple of examples, the hackers broke into the US Securities and Exchange filing system, and what that allowed them to do was to gain access to non-public information about firms that were going to issue securities. And for less advanced countries, there was this theft of $81 million from the central bank of Bangladesh. Regulation, as I mentioned, for the Kenyan example is very important. I would say there are at least 3 places which do it well. So the UK FCA has this notion of a regulatory sandbox where people can try out new fintech products, which have been quite successful. And then Switzerland and Singapore also have fairly liberal regimes of regulation, which has allowed them to develop fintech industries. And I think this is one of the key issues for both Group 1 and 2 countries in MENA. So let me conclude. My time is up. I think it's important fintech is important for all MENA countries, but in somewhat different ways. I think for Group 2, it's a great chance to improve financial inclusion and improve funding of firms. I think for Group 1, it's great for improving e-banking, but also for funding new firms to diversify away as climate change reduces use of oil and gas. So let me stop there. And if you want to follow up and read about any of these in more detail, there are some references to do that.
Thank you very much, Professor Allen, and thank you for keeping up with the time. Let me just make some suggestion for people that I believe I was asked to do before. We remember that we have an Arabic translation, so you can actually go to the interpretation. In the bottom there is a globe mark here, and you can get either Arabic or English, of course, if you will hear to the session directly. ERF also has a YouTube channel that is streaming this live, and it will be there. And participants, please be kind to write your question in the chat side, the Q&A, or you may raise your hand when we are giving you the floor. Right now, I'm going to move directly to my colleague, Professor Mina Shinar. Professor Shinar is a professor of economics at Loyola University in Chicago, and she is the director of the Center of International Business. She has been there for a long time, I think, and she got her PhD from Texas A&M. So she is like from upper the US, the south part. They have their own accent, but I don't think that she going to use that with us. Professor Shinar has held many positions. She is my predecessor as the president of the Middle East Economic Association for 2 terms. She is the editor of topics in Middle Eastern and North African economies. She is the associate editor of Review of Middle East Economics and Finance by Routledge. She is the associate editor of the Journal of Economic Asymmetrics, the AFP Press. And of course, she is a lifetime fellow at the ERF, the Economic Research Forum. Professor Shinar, you have 10 minutes. I'm going to bother you by giving you warning after 5, 3, and 1. So you might use your chat too, or I might bob up in your chat. Please.
Absolutely.
The floor is yours.
Thank you, Hassan. Thank you, distinguished audience and Professor Allen, for a wonderful opening to how Middle East economics can, or Middle East economies can benefit from this. So I prepared my comments. I am at Chicago right now, but I'm originally from Turkey, and I am proud to be part of ERF. And thank you for asking me to comment. Let's see. Oh boy. All right. Let me minimize the pictures here so I can see what I'm doing. We're now living through serious technological change originating from the changes in the software industry, in that we have distributed ledgers. These are databases that are shared by consent by multiple people or sites. They are transparent, and they are sturdier in face of cyber attacks. What are the cyber attacks? Distributed denial of service is one, where they flood the website, or by malware, which is virus, then having just a single centralized ledger. There are different blockchain-powered solutions, and we have more than 1,000, and they have several network designs. And of course, we have the cryptocurrencies such as Bitcoin that Professor Allen talked about, which are based on a particular blockchain design. Large crypto assets or coins such as Bitcoin, Ethereum, Dogecoin are now used for diversifying portfolios of at least a lot of individuals here in Chicago that I know of, and for some internal and cross-border transactions. Okay, Based on the avenues opened by these new technologies, central banks have either issued or are deciding to issue their own digital currency. I know that Swedish Central Bank and the Chicago Fed started working on the topic at least 4 or 5 years ago. They haven't actually, Chicago hasn't issued, or US hasn't issued anything yet. Some firms have used the option of issuing initial coin offerings, ICOs, to raise funding to issue cryptos for their transactions as an entirely different ways to raise capital. So ICOs would be the equivalent of IPOs of the stock market, except they issue their own cryptos. And unlike bond issues, countries and central banks do not have regulations yet in the ICO market, as Professor Allen talked about. His speech emphasizes on how these digital tools and innovations for MENA can be of much help in economic development. He points to some very important aspects of the MENA countries. Financial systems are not deep, stock markets are newly developed and not very efficient. Financial systems are bank-based, and that bank access can be exclusively by large government firms or politically networked firms, to the exclusion of small and medium enterprises, and of course, nothing for informal economies. He divides MENA by clustering them by GDP per capita into Group 1, high income, and Group 2, which we economists usually classify as natural resource exporting versus labor exporting countries, and or both. There are a couple who do both. Due to thin financial markets and country risks, he notes that funding of new industries will have to be in other ways other than the scant venture capital or IPOs. He notes that internet access and affordability, and therefore e-banking, are different between Group 1 countries, almost 100%, versus Group 2 countries. He emphasizes financial inclusion, much required for economic development in the second group of countries who have lower GDP per capita. This is very much in line with the ERF goals and mission. He notes the growing importance of artificial intelligence and machine learning, as well as the traditional tools of credit scores in bank lending decisions, suggests digital banking may be feasible in Group 1 countries and peer-to-peer network lending more helpful in small-scale lending. He discusses central bank reactions and some of their digital currencies, notes the importance of cybersecurity, and points out the importance of using fintech in MENA countries. This is an excellent source of how fintech can especially help Group 2 countries and small and medium enterprises in terms of shedding light on the digital tools options to bring about more economic development. Let me now add some more aspects to macroeconomics and digital instruments by the following. Let me start with the digital coins first, crypto coins. You'll see why I started with that in a minute. Essential to security, safety, and liquidity to cryptos are the exchanges, such as the most popular ones as Coinbase, which lists more than 150 coins in the United States. Binance lists 500 coins in Cayman Islands. Bitmart, more than 1,000 coins in Cayman Islands, and there are many, many more. Safety of exchanges and therefore the liquidity of crypto assets are important. Loss of assets due to cyber theft have occurred and will again occur in the future. While bank deposits may be insured to a certain amount, while stock markets can be regulated, especially for settlement of trades and for extreme volatility, there are no such national sovereignty domains over these exchanges, which may lead to large losses of assets by local citizens. Now, special case for MENA. There's special demand in MENA for cryptocurrencies because they're especially attractive to investors in MENA for being Sharia compliant, where some coins, protocols, and crypto assets are part of Islamic finance by the ethical, inclusive, sustainable, and charitable investment principles. So this is an issue we need to watch out for, especially for the number of investors coming in through Islamic finance into the crypto markets. Yet today, most of crypto asset risk is on the investor, which is a big cause for concern. As Professor Allen also notes, The regulations of ICOs by the firms are also of prime importance and need to be developed. Let me now come to the central banks. Central banks are also in various stages of dealing with the digital world, as pointed out in his speech. These are new ventures and create monetary policy issues, which we have not seen so far. Ulig and Xi used the new Keynesian model to analyze monetary policy and macroeconomics in a futuristic scenarios actually, where multiple parallel currencies exist. In other words, you have the national currency of the country plus a digital currency. It could be a CBDC or it could be a large group of crypto assets. They coexist in an economy. Their concern is what happens by exchange rate shocks, where the digital currency appreciates. In other words, you can start with a one-to-one par exchange rate between the CBDC and the native currency. But if the digital currency appreciates, what to do? Of course, this increases uncertainties. In such cases, should the central bank set the monetary policy to target inflation, which includes both digital and dollar or native currencies, or just the native currency, dollar inflation? And should they target the overall upward gap, including digital currencies, or just the upward gap of the dollar pricing or native pricing sector? Questions to think about. Neapel discusses the introduction of central bank digital currency into the monetary system, where bank deposits, central bank reserves, and CBDC have different operating costs and liquidity, and then examine central bank policies. The suggestions are that with different interest rates imposed on reserves and on CBDCs, central banks can still neutralize the impact of CBDCs in the macroeconomy with some tweaking. In sum, the macro models you and I studied with money and output multipliers, transmission mechanisms between monetary and real economy, money supply definitions need to be scrutinized and remodeled and tweaked in the new digital world. Does this mean that MENA countries need to stay away from cryptos, ICOs, CBDCs due to the complexity? Just the opposite. Professor Allen shows us that the vulnerable SMEs in Group 2 countries as well as Group 1 countries can truly benefit from the digital world to the benefit of all, with some much needed future regulation. Thank you. How did I do, Hassan?
You're fine, you're fine.
All right, I'm done. Thank you.
Thank you very much.
Let me stop sharing. Okay.
All right, I will move directly to our second lead commentator, Professor Marwan Zobi. Professor Marwan is associated with the German Jordanian University, and he has also his PhD from Texas, but this time from Denton, I think, North Texas. He has been ex-chief of financial and economic expert in Saudi Arabian Person Limited, ex-senior economist with the IMF, ex-general manager and dean of the Institute of Banking Studies, and executive supervisor with the Open Market Operation and Public Debt in the Central Bank of Jordan. Again, Professor Marwan, you have 10 minutes and floor is yours. You are muted, Dr. Marwan. You are muted.
Yes. Okay, thank you, Dr. Hassan. And I'm honored to be here. Thank you, ERF. Let me start and, quickly, because I will need those 10 minutes. The digital transformation is here to stay. So this is something that we have to accept and live with. And it's affecting everything, capital, labor, and markets. Now, according to United Nations, digital transformation has advanced more rapidly than any innovation in our history, reaching 50% of the developing world population, and in only 2 decades by enhancing connectivity, financial inclusion, access to trade, and public service. Let me see. Let me try to change this screen here. Okay. And according to World Trade Organization, it reduced transaction cost by 15% between 1996 2014, and that online commerce has been growing rapidly. But macroeconomics management is becoming more complex. When I divided this speech into two parts, macro, small part for macro and another for finance. There is some people claim that there is some kind of shadow economy where these are some of these transactions are not measured in the GDP, which create problems for management. And the second one is that there may be more unemployment because of the lack, especially in MENA countries, lack of needed skills. Monetary policy, as MENA is mentioned, is complicated, monetary and finance policy, because now production chain is across countries. It's not just one country. So there's a spillover effect that's coming from different countries, and therefore price stability price movement is affected by fundamentals from many countries. Therefore, inflation targeting is going to become more complicated, and of course, cryptocurrencies also complicating things, plus the threat of terrorism, cyber terrorism. This was like a brief speech of macroeconomics, and then moving to the finance in the digital age. These companies are growing in a big way, and one of the reasons is that borrowers after 2008 crisis, they were either unable to borrow from conventional banks or unwilling to borrow from conventional banks, and they have other alternatives. But of course, many of these are not, as Dr. Allen mentioned, are not regulated. But there are advantages: sparing economic activity, greater variety and convenience. This is, the obvious advantages: faster payment and efficient production process. Now, moving to the challenges, not many of these products that came with the fintech corporations, risk characteristics are not well understood. And we're trying to understand, but many of them are not, because they're not conventional, they're not historically been there for a long time. So, and these create challenges to banks, because now they are competing with banks, and they're affecting the franchise values of banks. So I think for MENA, it's a chance for us to study these things, because they're not spread in our region. And then many of these are unregulated, threatening the financial stability. Traditionally, we know that nobody should accept deposits except banks. Now we can see it's possible that financial firms, not banks, but accepting deposit, and this is a challenge. I don't know whether we should allow them or not. I'm not sure. In a central bank, working in a central bank, I learned that they should not be allowed. You can open an account in a financial company, but you should not be allowed to accept unconditional deposits like a bank. And some of these activities not regulated, such as P2P, and therefore there is a call for regulating activities rather than organizations. Dr. Hassan, am I doing well so far, or how far I am in time? Oh, I can't hear you.
Sent you by chat, but you have 5 more minutes.
Okay, thank you. Okay, so there is a call for regulating activities, rather than organization, due to these complications. And there is a competitive challenge from fintech firms, and this is of course affecting the franchise value of incumbent firms, And it may induce them to take more risk because they want to maintain their market share. These are challenges, I mean, to central banks and to regulators and government. An outcome of all of this, in my opinion, payment system, yes, now this is faster, real-time payment. And according to the World Bank, transferring $200 through banks costs 8%, while through fintech firms is 4%. This is a huge saving. This is great saving. So, but I mean, this is good, but we need to remember the problems. The difference lead to huge benefits, of course, to countries that rely on remittances, such as Jordan, Egypt, Syria, Lebanon, and many other countries in MENA. And one of the outcomes is financial inclusions, because there are non-banks individuals. Now they have the chance to have financial services, such as the deposit, and borrowing, and maybe also digital currencies. These are alternatives to traditional instruments. But of course, this is cryptocurrencies, as mentioned by my colleagues. This is another challenge, and I'm just wondering whether we should discuss them or whether we should accept them in our life. These are not. I don't consider them myself as assets. I write here assets, but myself I don't consider, because they're not claim on anything. When you buy a stock, you have a claim on. You have an ownership in a company. And when you have bonds, for example, you have claim on assets, but these are not claim on anything. I call them gambling. It's a way to gamble. So this private, and therefore, and those private cryptocurrencies are creating a huge disintermediation, a huge problem to central banks and to countries in MENA and other countries. And these are making monetary policy management, money supply very difficult. Central banks around the world are struggling on how to deal with them. Central banks, our central bank is still struggling. And I know most central banks they don't know what to do. I mean, if the central bank issue cryptocurrencies, then they're creating this intermediation themselves, because people will start depositing with the central bank and leaving conventional banks. So, and so fiscal and monetary policy should account for this when targeting macroeconomic variables. And, central banks, if they issue them, they can be token-based or account-based. In all cases, this create this intermediation. Now, issuing central bank digital currency is still under consideration, and globally. I mean, yes, China and a few other maybe countries, they've tried them. But cryptocurrencies, if they come from central bank, is one issue, but private digital currency is a big issue. Thank you very much. Thank you.
Excellent, excellent. Right on the mark, Professor Marwan. Thank you very much. Just reminding you again for the audience to write your questions in the Q&A area there, and there is a button. And when we give the floor, we will go to this, and then we can use also the raise your hand button at the time. One more time, thank you very much, Professor Marwan. We'll move directly to our last but not least friend, Wafiq Grace. I know Wafiq a long time ago when he was a senior advisor in the World Bank, head of the financial sector assessment program. And then he has his last position as a chairman of the Central Bank of the Republic of San Marino. In between, he mingled around with investment preparation, and his education is from mainly Switzerland. He got his PhD in 1977, and He is a very prolific consultant on the private sector. Professor Wafiq, you got your 10 minutes, please.
Thank you very much, Hassan. Thank you, Professor Allen, and all my colleagues for very insightful comments and presentations. I haven't prepared a power presentation, but I have some notes and I will share them with Shireen, and she will share them with you. But let me take a few steps back and say, it seems to me that there is a fundamental thing here, is that digitalization, which is technological progress, is aimed at, well, improving efficiency, market integrity, financial inclusion, but essentially it hopes to do that by having a technology that allows all these things to happen at lower costs. And what it means is getting rid of the intermediaries and getting less of regulation, both things being costly for the system and hindrances for the development of the economy. What's happening, it seems to me, is a constant tension between how much regulation and intermediaries to have and how much technology is going to allow us to get rid of these things. So it's maybe not either or, but over time, maybe with technological progress, better DLT and blockchain and all the rest, we will improve efficiency, market integrity, and financial inclusion. But let me go through a few thoughts or a few examples to show that tension and where it is emerging. It's true that payment systems have allowed, inclusion, and many people, even in MENA, it's not only with M-Pesa, but to have, just for MENA, to give you a few examples, you have Fawry here with 30 million users and more than 3 million daily transactions. You have NBE Cash Pay, which is the National Bank of Egypt. You have Jumia Pay, and each of the mobile phone companies having the digital wallets. There is a new thing that is being installed, which is coming from UAE and Jordan, is Zbooni, for helping 3.5 million SMEs. So there is a lot happening, but at the end of the day, there's always something that is hurting, and then you have some regulation coming. And for example, for the payment system, you have, for example, in Europe, this DSP2, which is the latest version of the regulation of payment system requiring 2 or 3 or more identifications, slowing, unavoidably the transactions, adding some cost, but essential for market integrity. So you have that tension happening in there too. And also, let me quote Kaspersky study on Egypt that just came up, and that says where they have asked users, and 52% of users said they feared storing their financial information online, while 30% were concerned that their devices were not sufficiently secured. 21% said they do not trust the security of these platforms. 28% that they had no reservation about it. So this tension, one could go into cryptocurrencies, which, as Professor Allen said, are more becoming of speculative instruments, but they could become with more, progress, more useful for trade, but they are more really of the type of assets you invest in rather than currency that you trade with, at least up to this point. And also, if you think about stable coins, they are the closest thing to maybe to bank deposits, because they are supposed to be backed by reserve assets. But the rules are not clear for everybody. Are they exchange? Can you exchange them for at par? Is it guaranteed like an FDIC deposit, or it isn't? It isn't at this point. So the question is, how much do you regulate them? How much do you look at the intermediary or at the activity? It possibly, for all these reasons, at this point, from what I understand, MENA financial authorities consider cryptocurrencies highly risky and limit their development in the majority of the region's countries. This is according to a study by the Egyptian Banking Industry Institute of 2020. I mean, everybody talked about the central bank digital currency. What's the role of the central bank as a monetary authority and as a competitor of commercial and other depositors? I mean, if interest rates are become, too attractive with the central bank digital currency, there will be a run on deposits of banks. So how do you balance? Of course, there are always ways of imagining, but it's not a clear-cut things. And the progress is happening, but one has to be careful about what one is doing. Also, consensus protocols are extremely useful, but very often you have these consensus protocols. At one point or another, they are either too costly to develop and implement, or to make them, really effective, you need some some centralized database in order to check against it what's happening. So I don't want to. I mean, I have more the AML on the AML CFT. This is we cannot really pass that easily. These are fundamental issues that are affecting every single country. So, and also, for example, there is this the travel rule that FATF has, which about exchanging cross country, and some groups of virtual asset service providers in the US have developed something called Trust, but then it needs a centralized bulletin board to identify the correct counterparty. So again, we go one way, and in order to avoid some problems, we fall back on a problem, either regulation or an intermediary. One thought is, Professor Allen talked about the scoring and better creditworthiness kind of tools. Why not imagine that the technology, fintech businesses, and the developments of API would allow credit bureaus or the likes to develop more comprehensive and effective creditworthiness assessments that could be bought by many others and help also in the financial inclusion. So what I want to say is, the whole thing seems to me of that tension of trying to go to P2P in order to avoid intermediaries and limit regulation because you had integrity via technology, and the practicality of life, which leads you always to identify who's doing what. And in order to do that, you need some of intermediaries or regulation. Thank you very much.
Thank you very much, Wafiq. You're right on the mark as well. So we are really on time. We have, of course, to open the floor. However, I have to use my privilege now to ask the first question, if you don't mind. I'm talking about the question now in the mind of everybody with the Ukrainian-Russian war that is going on. A lot of talk about using the digital currency as a way out for Russia, along with the Chinese promoting their own. what Professor Allen see as the impact of the shift toward digital currency by these two powerhouse on the international monetary system, so to speak, and specifically the domination of the dollar in the race for the hard currency globally. If you would be kind to give us a brief afterward, maybe we can, if you prefer, can take one by one, or we can have 3 questions at a time. Which one you prefer?
Let me answer that one first.
Okay.
And then we can go through it at a time. I think it's a very important one. Let me say, first of all, thank you to the discussants. I thought what they said was great, and I wouldn't disagree with anything anybody said. I think they did a very nice job of expanding out and adding to what I said. So this question that you ask, Hassan, is a really important one. And what we've seen over the years is that US has used dollar power, so to speak, in a very strong way. So, you know, in particular, the various countries they've targeted, probably the one which got the most publicity was their targeting of Iran. And for example, the $9 billion fine of BNP Paribas for processing some Iranian payments when there were sanctions against Iran. And, you know, I think they have used that a tremendous amount. This time they've used it even more, in the sense that they've banned the Russian central bank from transacting and so forth. Now, it's a very interesting question how much other countries, in particular China and Russia, will develop alternatives to the dollar. It's very difficult to do that because they have so much power in terms of the dollar being used for so many transactions and so on. And even the euro is not used that much. So I think there will be alternatives developed. I mean, I think crypto probably isn't big enough. It's not scalable enough to do that. But I think the Chinese may take advantage of the CBDCs and the fact that they've got a working system and other countries haven't, to start using it in a much more significant way than currently. So at the moment, the RMB is not used very much for trade. It's not used very much for reserve currencies and so on. But I think this banning of the Central Bank of Russia for using dollars is going to have a long-term effect, and a move away from the dollars being dominant solely, or the dollar and the euro. But quite how long that's going to take, and whether it's going to happen in a huge way or a marginal way, I think it's too soon to say at the moment. But I think it will happen, just the same way that the pound was replaced by the dollar starting in the First World War, and then through the interwar period, and then eventually the sterling area hobbled on for a little while, but not in great quantities, mainly a few countries that used it. And then the dollar was dominant, then the Deutschmark, but then the euro has some use, but not as much as one might have expected originally. So I think it is really significant. I think things will change, but how fast they change is very uncertain.
Okay. Thank you very much, Professor Allen. I thought I have not given you the chance to respond to the commentator, but if you would like to respond to any specific issue raised by them, the floor of yours, of course.
No, I mean, as I said at the start of answering your question, I agree with everything they said. I think they amplified a lot of the points, particularly the discussion of macro things, which I didn't spend much time on, but which is really important, and developed a lot of themes in a very interesting way. So I don't, other than saying thank you, and very, very useful.
My only comment about your answer for the use of the alternative currently monetary system, since they deprived Russia from the SWIFT system. I think the issue has been planned for a long time. I remember when I was in the African Development Bank, that China signed almost 30 treaties. This is in 2009, with all of the countries in Africa for what is called the local currency swap. And the issue of the local currency swap wasn't understood at the time very well. Now I think they are even using it at a larger scale with a lot of countries in not only in Africa, but in Asia and in Europe, is to reduce the dependence on the dollar. And I believe they succeeded first to get the yuan into the basket. This was the first success story for them. And what I imagine that they are now getting a great opportunity to even expand more and enlarge more this race of the currency, so to speak. And what the US is giving them is a real gift to use this alternative system, binding with Russia and maybe other countries later on. I think that's planned. I don't think this is random. So I might be more inclined to say that it is going to happen with the growth of the Chinese economy to be the largest economy in 3 or 4 years from now. The alternative system will definitely gain a lot of impact, and the dollar by definition then will be less and less used around the world, specifically if this what we hear about agreement to use the yuan or the digital currency as a unit of account for the oil and the like. And I think there is an inclination to do that. When I heard about the US decision to move Russia from the system, I said, my friend in Washington are shooting themselves on the foot, because that's exactly what is going to happen. So that's just my comment.
No, I mean, I think that's a very good point, especially this fact that the central bank swaps back in the financial crisis excluded the People's Bank of China. It's a very important one. So then they developed their own network, and that's true. It is becoming more and more important. I think the real problem is that it's this issue of the secondary and tertiary sanctions that the Americans might use. So for example, if the Chinese start aiding Ukraine, then they may well sanction any banks that are involved and so on. So at the moment, it's a difficult thing for any individual bank to do. And just as you see many companies in the West reluctant to do business with Russia, you also see Chinese companies. So I mean, I agree with you. It's a very important development, and we'll see how it develops. I mean, it's very interesting at the moment with the Russians demanding payment for their oil in rubles from the Europeans, and the Europeans are saying, no, we're not going to do that. And now we're coming down to a crunch point where the Germans are saying, okay, well, we're prepared to not deal with you. So there's a bit of a face-off coming up in the next few days, which will be very relevant for this, I think.
Exactly. Thank you very much. I'm going to move to the question of the floor. I believe we have the first one by Mr. Saeed Abbas, who is talking about the NPL, the non-performing loans, as too high, even under the conventional banking practice, how to manage under the digital banking. He is expecting it to be not only difficult, but rather disastrous. We have another question from Tahir Al-Hassan from Sudan. And he said that his thesis is basically about how to use or develop CBCD in a country like Sudan. And if there is any chance to make it as what the Nigerian have done with the e-NIRA and the like. So he was just asking about this possibility for this group of countries that are not going to be. Anyway, Mahmoud Haddad, my friend from Tennessee, was asking about the cryptocurrency, if it can be used as a hedging instrument. And he is also asking about what theory to use to value this cryptocurrency issue. Those are the three questions that we have right now. And I encourage my colleague in the floor to ask more questions. We devoted about 20 minutes for you, so use them wisely. Thank you, Professor Allen.
Thank you. So I think the first question about NPLs, and if they're too high under the conventional system, here we do have a lot of opportunity for artificial intelligence and machine learning to really improve things, because there's a lot of evidence in the literature that you can predict defaults much better with a whole range of information, including obviously previous bank account information and how people manage their financial affairs, but also what kinds of websites they go to, what they spend their money on, and all of those kinds of things. So there are significant improvements potentially available from these. And I think this is not just in places like the US and Europe or China, but it's also true in many emerging countries. So if you think about Kenya, they're also using a lot of these techniques in M-Pesa and Equity Bank. So they have a lot of application. The question about whether countries like Sudan can develop CBDCs, I think that is possible once we have mobile phones, with many people in the country having them, and also the shops getting them and the vendors getting them. It may take a while for a country like Sudan for that to happen, but I'm sure once we have a lot of experience with them in many places, and China, is as I say, is in the lead, those kinds of things will be possible. And it may be a country like China can help somewhere like Sudan do that. So can you use cryptocurrencies to hedge? I think you can use them to diversify. Many people are doing that, and some of the discussion pointed to that. I think it is a useful diversification. I haven't actually done that myself yet, but I am thinking about putting a few percent in. It is very difficult to value. There are papers out there now which are being published, which discuss that. And if you look at in some of the papers that I put on the final slide, you'll see how people are thinking about that. But I don't think they're particularly practical yet. So it is something that's very, very difficult. In terms of hedging, I think there's a lot of correlation with standard assets. So it's not a great instrument for hedging cryptocurrencies.
Thank you, Professor Allen. We have one question in the chat by my friend Abdel Fattah Abu Shukr from Palestine. He was talking about the DC lead to lose and the effect of monetary policy of the central bank. Beside the risk of losing the wealth of individuals in case of crimes, I would say, or hijacking, as he put it. So he was talking definitely about the negative impact of the DC on the monetary policy and on the other bank. One of the, this is the first question, and then we have two raising hand here. I have Professor Marwan and then Professor Ibrahim Al-Badawi. So if you would be kind to Professor Marwan to ask your question, and then Dr. Ibrahim will also ask his. Muted, yeah, Marwan, muted.
Thank you, Dr. Hassan. It was not a question. It was, a concern for Dr. Allen and for the, for all of us about the first question. Can I do that now? I mean, we move to another question, but I think it's important.
Sure, please.
Okay. We were discussing the cryptocurrencies and digital currencies and the monetary system. All these things and the dollar are based on unjust rules. These are not just systems, and they shouldn't last for too long. Monetary system is based on the U.S. dollar, and and the whole world is using the U.S. dollar, and the whole world is protecting the U.S. dollar because everybody is holding it. And I call digital currencies came as probably one of the reasons of digital currencies is the frustration from the U.S. dollar. This is possible. I mean, at least this is my theory. That out of frustration, something came out. Some people around the world, they want something different, and they come out with this idea. But it's a handicap idea, in my opinion. It's like a pregnant woman who waited like 50 years to have a baby, and the baby came out to be handicapped. And that's, this is to me, it's not something that we should encourage, cryptocurrencies. But my question is this: Are we unable to come up with a different system? I mean, the world is unable to come up with a system other than the U.S. dollar. Is cryptocurrency, is it the answer to the world? I can't understand this. Really, I can't understand it. You cannot tell me that, a cryptocurrency is something good we can use here and there for trade, for speculation, for investment, or for portfolio management. That's fine, but this is not what we hope for. We want something fair, just, that everybody can use. If Dr. Allen or anybody can answer. Thank you.
Thank you, Dr. Marwan. Dr. Ibrahim al-Badawi, please.
Thank you, Mr. Chairman. I want to raise an issue related to political economy. I happen to actually know the former governor of the Central Bank of Kenya. And he literally acted like a champion to fintech in Kenya against some very prominent members of the cabinet then, as he told us, including the finance minister. And his view is that sometimes ignorance could be a factor, that, because you don't know, you don't know the issue and the potential from it, and so you tend to exaggerate the risk and so on. So that was a consideration. And he said that because he himself has a PhD in monetary economics, the former governor of the central bank. So he has been very effective in convincing the president and the cabinet so that Kenya became one of the very early countries in Africa to adopt fintech and to promote, to enact laws and so on to facilitate the adoption. On the other hand, in Tunisia, I was part of a webinar, and a former minister in Tunisia said that actually, even though cell phones are very widely used in Tunisia, being relatively sophisticated middle-income country and what have you, but it has not been deployed to support cash transfers and other applications, because the banking sector in Tunisia is very powerful and lends the government and so on. And they saw the development and the wide use of mobile money as a threat to their business. So I just wanted to get your perspective, yourself, Professor Franklin, and of course, Alan. And I want to thank you for a very interesting presentation. But I also like to know from the regional experts, Wafiq, MENA, and Marwan, about if this is really a concern in our region. Thank you.
Thank you for those questions. Let me first of all deal with this first question about the negative effects of CBDC on monetary policy. And I think there is a real issue there that if we do have private current cryptocurrencies become significant, in a traditional way. So I think the CBDCs have a potential to push out private ones, but not fully, because there's this question of anonymity, which is a very important one. And CBDCs have they may try and design them so that they have anonymity for small transactions and so on, and not for large transactions. That's one of the points that's being discussed. But quite whether that depends a lot on the political system and processes to quite how much you can believe them. And if everybody sees or if the tax authorities and the central bank sees every transaction, it's a very different kind of world than we're used to. So I think that there are significant issues. There are significant issues if what happens if people just stop using the domestic currency and use private cryptocurrencies. Then how does that work? We've seen that in some countries, people use other currencies. So the dollar and the Deutschmark were widely used and still are, or the dollar at least is. The euro is to some extent, maybe not quite as much in some places as the Deutschmark, but there are real issues there. And this issue of security is really important. People have lost lots of money by hackers breaking into wallets and so on. And I think that is a really important issue that we all have to worry about. Professor Al-Zubi, your question about the US dollar and what the French call the exorbitant privilege of it is a really important one. We do see historically, as they say, that there usually is a dominant currency of some kind. So the 19th century, it was the pound, and then it switched to the dollar in the 20th century, and then gold was there on the gold standard for many years, and so on. So there does seem to be a network effect that has that effect of creating one currency, which gives the country that issues it, or the authority that issues it, tremendous seigniorage and other advantages. And now, as it's discussed, it gives the US tremendous power economically. And the question is, what would another system or a potentially better one be? And my own view is that it would be better to have a multipolar system. I think there's tremendous amount of risk involved in having one currency dominate the world financial system, because if anything happens to that country and the economy gets into serious trouble, or there's another Great Depression or something like that, that's a real problem for the world. And we'd be much better off to have at least 3 reserve currencies. Excuse me. So you can imagine a world with the dollar, the euro, and the RMB corresponding to the 3 large economies in the world. So I think that kind of system, which would allow, excuse me, central banks to diversify their risk in their reserves and so on, would have a lot of advantages. And I think it would be great if economists spent some time thinking about some of those issues. There is a small literature on that, but I don't think we've looked at these advantages and different advantages of different international monetary systems well recently. And I agree with you. I don't think it's cryptocurrencies. I think the issues with an e-dollar or an e-euro or yuan are roughly similar as the ones that you were referring to. Professor Ibrahim, I think the governor of the central bank and the whole staff of the Central Bank of Kenya did an amazing job to get M-Pesa approved, and also to allow Equity Bank to do what it's done. And it is a real question. I think it was kind of a very unique situation. Very few other countries have come anything like as close to doing that as Kenya did. It doesn't seem to work so well in other countries. That may be because there's a monopoly issue that Safari.com had 80% of the mobile telephone business. So that there are a lot of issues there, but I do think it's remarkable. And I think it was a great gift to the world to show that these systems could work in a good way, and that the traditional sort of what you described as ignorance, that is so prevalent in many of these kinds of situations, and Kenya did a great job just showing that wasn't the case. And I think we need to have more innovations, at least try them and see how they work out.
Excellent. I think the question is directed toward our commentator, but okay, Minnie will take the first shot.
Thank you. I agree with Professor Allen. I think a basket of currencies of the largest economies at this point is really a better hedge or a better system. But I'd love to come to the world 100 years from now and really see what's going on with respect to the currencies. But with respect to the first question, Ibrahim, you had on the CBDCs, I think one has to distribute the risk. And therefore, I believe that when the CBDCs come out, they should also come out with the underlying futures and options contracts so that the hedgers can be protected and the speculators can win or lose depending on the risk they take. So I think it should go hand in hand. It can't just be like, okay, here's my CBDC. Let's see what you're going to do with it. All right, thanks.
All right. Wafiq and Marwan, if you have any comment about Ibrahim's question, what do you think of the future scenario for digital currency or any digital transformation, in this case, in that arena and in the Arab world or the Middle East?
Yeah, if I may, I think it's we need to have our central bank and financial authorities look at these developments, look at the technology, and maybe do like what the Kenyans have done, kind of step by step expand where it works, even if it's on a limited scale. And then there would be a kind of a momentum that would allow to have more expansions of these things. But let's not think about jumping straight in the pool and having something totally new happening straight away. It's a kind of a process. We should be on our toes, doing it, looking at the thing. And when there is something workable, even if it's limited, then let's do it.
Okay, Professor Marwan.
I'm asking the same question to myself. I keep asking the same question. I don't really have an answer because I worked about 25 years in a central bank, and I discussed it with the governor here in Amman. It's still under. They know they should do something, but they don't know what. This is a time where it's confusing. I mean, is it going to be solely to the central bank, or is it going to be a currency that can be used by banks themselves? Can we deposit in a bank or deposit in a central bank? If we deposit in a central bank and we earn interest, then we create this intermediation. And that's what we don't want to do that. We don't want to make our assets at the central bank more attractive than assets in the banking system. We want financial stability. So I believe, as maybe Dr. Rafiq said, we're going to do it step by step and see how it evolves. And until we reach some kind of a currency that everybody accepts. But the point is, my point earlier was, regardless, I mean, this is not a big issue for central. How about the private currencies? The private digital currencies. That's the big issue here, that everybody is recommending, and I was surprised that now in this session we recommended that it could be a part of our portfolio, and we should not encourage these kind of assets. That's my opinion. Thank you.
All right, thank you so much. I just wanted to mention what Professor Abdel Fattah Abu Shukr put in the chat here. He said that minutes ago, Medvedev, the Russian, I don't know if he is a prime minister now, but he announced that US and Europe have basically hurt their reputation by freezing the Russian central bank money or asset. And he said, this is the Russian vice president, he said that new international monetary system is coming, and the authority or the high power is not going to be with the US and the European Union. So this is a prophecy of what we've been talking about. Okay, I think we are almost out of time. Dr. Ibrahim Al-Badawi has asked for the floor. Dr. Ibrahim, اتفضل.
Thank you. I know that we are done with the time, but there are two quick things I wanted to mention. Is that we have been doing that right now in Nairobi. There are 3 big data companies taking advantage of this regulation and that has facilitated transactions through the mobile phone, which means that all the records are recorded and so on. So these companies are licensed by the central bank or the Ministry of Finance, I don't know, but they actually sell data to the private banking system. And some studies have shown that actually it has, significant impact on financial inclusion. And we are doing actually some studies now jointly with the African Economic Research Consortium, which, just by coincidence, it happened that is now headed by the former governor of the Central Bank of Kenya. So in fact, we could think together actually of maybe putting together a study to actually take Kenya as a benchmark and explore, how we might actually benefit from the experience of Kenya, at least on this very limited dimension. Not talking about cryptocurrencies and all these fancy things, just mobile phones and digital transfers and things like that. I think this might be an interesting idea. One final thought, so I'm going to work with you on this, develop this in the future. But one final thought is that, his name, Professor, the Nobel Prize laureate, anyway, I forgot his name, but he said that actually, an alternative financial system is easier said than done, because actually you need a very liquid, bond market, and also you need a level of sophistication that China has not yet reached in terms of the manufacturing products that both China and Russia need. And so it will be very difficult to think of an alternative, so anyway, it's so the jury is out in terms of the alternative currency, I think.
Okay. Well, if Professor Allen, if you have any final thought, the floor is yours.
No, I'd just like to thank again the organizers for a very interesting session, and the discussants and everybody.
Thank you very much. My last comment on your point, Ibrahim, I wrote this about 6 years ago because there was some talk about the race between the dollar and the yuan. And I said China is not going to be able to expose itself to the fluctuation that making the currency universal entails. In order to have a universal currency like the dollar, you have to be much more open than the Chinese, and you have to accept a lot of, as I said, exposure and the fluctuation in your currency. But the current system in China still does not allow this much. Thank you very much, everybody. I really enjoyed this session. It was a pleasure having Professor Allen, Professor Shinar, Professor Grace, and Professor Al-Zabi, and hope to see you very soon in another session of the ERF. Thank you all.
Thank you, Dr. Hassan. Thank you, everybody.
Thank you.
Bye-bye.
Thank you.